Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Tuesday. It is the 7th of May. There was some selling, so much for carrying over any of that bullish momentum off of yesterday into today's open. The Bears pretty much opened with the ahead of the game and spent most of the day basically winning. And good afternoon, Tanner. Good afternoon to you, Emily, and hi, Patricia. No haircut for me. It's just finally getting long enough that I can do something with it. So it's one of those type of a deals. One of these days, I thought about it today, but one of these days I'll let it flop out. So, and hey, Micah, good to see you, and hope you all had a good day, both in and out of the market, as the Bears really took this one. There is no two ways about that. Here you see the S&P jumping right into it, gap down on the open. We're selling in the futures after our market and really just drifted all the way till pretty much the close. Now, we did see what I would presume was some short covering at the very end of the day. You can see this 15-minute, last 15 minutes of the day, even last half hour with the hammer candlestick before that. So there was at least some buyers coming in. I suspect in large part they were covering intraday short trades, although you can never know for sure. That's going to make our charts a little more complex than maybe they were, or certainly more than we have had to deal with as of late. Volatility is back in a big way. We talked about it yesterday. I wasn't expecting it to pop as much as it did today, but now we're going to be getting some interesting credits, which is usually how I my natural transition when I start to see some selling signals in the market, but I'm not so sure that that's, they're not more shorter term signals. We'll see if that's, I don't really have a strong opinion that they are just yet, but, I do recognize that they are there, and I kind of start to look to doing some credits when that volatility pops, instead of, jumping in and a whole bunch of new bearish trades. And I know everybody's different, and sometimes I regret that. Sometimes I look smart, sometimes I look like a fool, right? That's how this game goes. But before we go any further into that, just taking a peek at the S&P 500, holding that 50-day moving average, that's kind of that key line in the sense we're going to see our Dow has broken through that, giving us, a pretty bearish signal in my mind, but not really seeing that, at least as of yet, here on the S&P 500. Really, I think for the most part, we're kind of in a sit back, manage existing portfolios place as we work throughout the course of the week. That is generally how I'm going to be approaching the next couple of days in the market. Everybody seems to think that maybe Friday there will be some resolution, which if there is, that could, or, isn't, that could certainly push us one way or the other. So much like yesterday, and even more so than yesterday, I think really caution is the name of the game this week in the market for me. I'm not willing to say that this is the end. I don't think there are enough signals for my tastes, but again, that doesn't make me right. So I will be watching the 50 SMA on the S&P 500 as kind of that support level as we're moving forward in the next couple of days. The Dow, on the other hand, did take out that old breakout point, which, in my opinion, wasn't a pretty important level of old resistance and new support. It falling through and closing below that 50-day moving average, whether I want to or not, I have to say that's a bearish signal. So I'm not seeing it on the S&P, but very clearly I do see it over here on the Dow Jones. And as long as we're below that, I am going to be concerned about this index. If we're looking at support, excuse me, we may be looking at this 200-day moving average. Let's sneak into that weekly time frame, see what we have. And this is why we did it. In addition to breaking that support, that price level, we also took out that short-term 9 EMA on the weekly chart, which obviously isn't super slow, but it is our fastest average, at least my fastest average. That is also a bearish signal, in my opinion. So on the Dow, I think you have to be saying, yeah, we're seeing some bearish stuff. Now that 9 has fallen below the 20. The 20 is not falling yet, but it doesn't have much room before it's going to start. From a bullish point of view, and hey, maybe this is just some noise, some volatility. It won't be surprising in my mind if it is. Right now, I think looking at the Dow, you have to kind of get back on track with those moving averages, with them turning over, with currently being below the 50-day and the 9 exponential on the weekly time frame. This index is, in my opinion, the scariest one from a bullish point of view, and the most bearish one with where everything is lined up. You know, you do a quick comparison to the S&P, we still have the 9 above the 20, although it's creeping closer. We're still above that 50-day moving average. So in my mind, there's more to like on the S&P than on the Dow Jones. And hey, I mean, good to see you. Over on the NASDAQ, very similar to the S&P. I think with the NASDAQ, and I think really, and I think when you say breakout, you really sum up what I need to see to buy, you know, across the board right now. I mean, and that's things starting to break resistance for the most part. There will be some interesting pullbacks, but I'm going to be very picky and cautious, and I won't be surprised if I just wave at all of them if it's one of those fast retracements. Now, if we simmer down late week, then we'll have a different conversation. But if everything's going to bounce off of its 20 or trend line, if it's still able to hold it today, tomorrow, it's just going to have to be doing it without me. Still be looking at breaks above, you know, above our 50 still, but our first close below our 20 in a long time. Again, just a little bit of a bearish signal. It's a lot better if you're a bull and you're closing above that 20 than if you're closing below it. That follow through tomorrow, both on the NASDAQ and on the Dow Jones, closing below, you know, those moving averages, that follow through is what I'm going to be looking for here tomorrow. I've seen over the years, you know, you want the close and then you want the follow through. And for me, that is my rule. So I've got the close. A little bit of follow through is going to make me feel a little more bearish, no doubt. But we still have the moving averages stacked the right way, 9 on top of the 20, on top of the 50, on top of the 200 here today. Yeah, and breakdown's probably a better way to look at it here today. There were a handful of stocks that actually were able to hit new 52-week highs today. There's like a half dozen. Some of them were earnings related. I was surprised that any did, but then you realize earnings, yeah, that can do it. So, and hey, Lewis, good to see you. Welcome, my friend. So still looking at the break. If we can slow down and generate some sort of, you know, flip around candles, dojis, hammers, inside candles, things like that, I still will be looking, you know, from a retracement point of view, it's going to be very select areas, and the tech sector overall will be one of them. But it is certainly not going to be tomorrow. So if that's going to be the way the day plays out tomorrow, I will just say congratulations. I'm cheering for you, bulls, but I will not be on board. Over in the rut, working back down, not able to sustain this for a second day in a row. We really had good follow through, but again, no upward movement this morning, as it was not meant to be. I'm not sold, you know, that this isn't a break candidate. Much like the dollar on that longer term time frame, I believe this is a major level at that 1605. We did break it. We closed it 2 days in a row. And of course, if the market is going to sell significantly, I mean, it's, you know, pushing 2%, which is a lot more than we are certainly used to throughout the course of this year so far. There's only so much you can do to withstand that. And so I'm really looking at the rut still as potentially one of those areas that could break. I will turn my opinion very quickly if we give out on this support level down here at that 1555 level. But as long as we're holding that, I still am looking for this break. There was a lot of momentum behind it on Friday and yesterday. And so one day isn't going to get me. We didn't break support. Yeah, we didn't hold the breakout point. But realistically, I don't know how we were going to today, you know, and so while it's not ideal that it didn't hold the breakout, I'd probably be really excited about the rut saying, yeah, we can, you know, we can buy this tomorrow if it did close above that 1605. I still feel that this is an area that with the momentum that we saw it push through, if this is just some volatility and kind of an ugly pullback, the rut could be an area that I like. But on the other side of things, if I'm thinking about condors, I'm really thinking, the breakout of the breakout points. So these highs from yesterday and Friday, that might be the signal where I'd be thinking about management from a condor, the bear call side, obviously, if and when I see that. Probably don't feel like I need to do that today. I am back within this trading range right now, whether I believe it's going to stay in here or not. So, and yeah, I'm actually traveling today, this next little while, Ilka. So yeah, you will see me in a different place. I'll be back to the old one with my messy bookshelf before you know it, but no messy bookshelf for the next week or so. So there we find ourselves on our indexes. Again, we're definitely seeing some more volatility. Obviously, you don't need me to tell you that, but starting to see things that we haven't seen for a while. The rut, I think, is kind of almost its own beast right now, and that's how I'm treating it. I'm looking at it, still looking for a potential break, but that signal from okay, there's more, is going to be above that high from yesterday, for me at least. But over in the NASDAQ, first time in a long time we've closed below that 20. Right? I'm not going to freak out because we closed below the 20 and got a really good bull pullback opportunity back in March. So I am not ready to say yuck, just yet. Still open to pullbacks over here, but got to call it what it is. That is the first time we've closed down there in well over a month. On the Dow, breaking below the 50-day moving average, and every bit as important, at least in my mind, this old breakout point. You really want to see something like this hold, in my opinion. Not a deal breaker, but it really is going to kind of have to get back above it before I'm interested again in the Dow Jones. It's going to have to get back above this 26, 150, 160 type of range, where we basically topped, broke out, tested. Very important price, and don't love that it broke through that. And yeah, they held up fairly well here today. Maybe it's just because investors are kind of looking at the small caps a little more isolated than some of the, let's call it what it is. Most of this is people deciding that now is the time, and short Trump's Twitter, and now a little bit of pressure on the trade deal. Certainly understandable that adds a little bit of fear to the market, I think. But I think maybe part of it is, investors, right or wrong, look at the small caps more as well. These guys are a little more isolated. They're not, doing maybe as much of their business outside of the U.S. That's not always going to be true, but a lot of them are smaller size companies with more limited scope. So maybe that's what it is. But I would agree with you, Lewis. It certainly held up a little bit better than some of the rest. Although certainly was down here today. Yesterday was really impressive over on the rut. Now this is going to really start to kind of mess up some of our technicals on our chart. So whatever's happening in the next little while, whether this is just kind of a volatile pullback or the beginning of a downward trend, our charts are going to kind of be a little ugly on our individual stocks and on our sector ETF. So we're going to have to kind of keep that in mind as we move forward. And now we've got all sorts of stuff on top of us, right? If we're looking at bullish retracements, doesn't mean we can't buy it, but we're fairly accustomed to, we broke out, we're above everything, there's no challenges to the next level. Much easier market to work with, I think. I think most of us would agree with that. On the other side, we get a lot better credits, generally speaking, in a market that looks like this. I know credits have been harder to come by as of late. We're now seeing some pretty nice credits, developing for those bull puts, bear calls type of strategies, which is generally kind of where I'm going to be turning to when the market's turning over or potentially turning over like this. Just a little bit more conservative way to go about it, I think. Specifically on the material sector, working towards that support level. Again, everything's going to be, in the red today. So we did see Dow W DuPont break down here today. And we looked at this yesterday, kind of hanging at that support zone, really fell through and just kept running here today. Looking at some of the individual components in the material sector, I think probably a good idea to do that. We've got Lynn, which is still kind of hanging right at that breakout point, right at that old support level, but a lot less pretty than it was 2 days ago. There's no doubt. You have Ecolabs kind of turning over a little bit, those moving averages. So late last week, when it looked like, the the sector was holding up pretty well, and so much of the downward movement was on Dow DuPont's earnings, we're starting to see a little more neutrality or weakness set in. Still pretty neutral on things like Lynn and Ecolabs and Sherwin-Williams. If I'm going to look at anybody, it's probably APD, because, well, the one thing I've noticed all year long is there's always a reason to buy APD, apparently. So, if any, stock within this sector is going to tempt me into a directional play in the next day and a half or so, it probably is going to be something that looks like these guys. So we're still seeing a little bit of more neutrality than we're used to. Not a lot of things breaking down, although we looked at Dow DuPont, it's breaking down. You look at Lib here, they're knocking right on the door. They're testing a pretty, significant, in my mind, level of support. So, hey, there's a breakdown candidate for my watch list, right? So, but still very rangy in a lot of other areas. So I still think if I'm, looking super bearish, probably looking elsewhere than this sector overall. A little more neutrality than I've been looking at with it as of late. I think you have to at this point in time, but not super bearish across the board, at least as I look at some of the individual components. Over in the energy side of things, actually held up a little bit better, coming right back to this little one-day support level from, I guess that was back in March, kind of holding up here today. It actually held up a little bit better than certain other areas here today, putting up a little bit of a fight. I still don't trust it and will remain with a bearish outlook as long as we're below the 65 mark on the ETF. Still more of these things look unappealing to me than appealing. Not a whole lot has changed in their technicals from on Friday, I believe, was when we kind of went through some of the top holdings here. So still looking at this as a breakdown. This makes sense. If anything's going to catch it, this is kind of the last line in the stand, if you will, before we kind of work towards this next level, which of course we do have some pretty significant history there at 62. So I'm not going to trust this support level at all personally, but I will respect it because I think you always should respect support. If that does give out, seems like very likely that we're going to 62 in my mind. But for resistance, still looking at that 65. Sometimes you'll see these, something break, and we've seen it all together many times, where it'll kind of go into a consolidation period while that falling 9 catches up and then kind of forces the issue, either pushes it down, pushing us through that support, or we pop above it, getting a little bit of a short-term signal for maybe a little more of a retracement to the upside. So we are not there yet, but we are kind of at a little bit of a support zone. Financials, one of the areas, if I'm tempted with a pullback from a bullish point of view, financials is probably going to be one of those areas. Held up pretty nicely, kind of right at that old resistance zone of that 2750 area here today. Let's take a sneak peek at some of these financial stocks, see how some of the big names within this space held up. They really seeing some selling with Berkshire Hathaway, and they didn't get involved yesterday, whereas pretty much everything got involved with the buying off of the gap down. Berkshire really, really struggled, so I'm not sure what's going on with them. A little bit of a pullback, although kind of an ugly one, still over in JP Morgan. You've got Bank of America, kind of a similar type of situation for the most part. You have Wells Fargo, who's kind of, well, I think a lot of people's whipping boy in the financial sector, taking out a little short-term trend line. That's not good, in my mind. It's certainly not bullish at the very least. You have Citigroup testing this recent breakout point. So in my mind, as I'm looking at some of these different areas, USB doesn't look all that unappealing, kind of sitting right at the old resistance, kind of right below that 9 EMA. I look at some of these components versus some of those that, say, we looked at in the material sector, and it just, if I'm buying something, I want it to be looking like some of these things versus some of the things that we were seeing over in the material sector. So I think for the most part, we're holding up okay here within the financial sector. More selling will likely drag it down with it. It's not going to be able to withstand that indefinitely. But I do feel for me, this is an area that if I'm looking at things from a bullish point of view going into the second half of this week now, this is going to be one of those areas I'm thinking about it being in. Same with staples. Even though our ETF did kind of give out of that support or that breakout point here today, kind of sitting right on the 20, still like this area overall, and certainly a little bit more of a defensive area by nature. Let's go take a peek here. I think on days like this, it's a good idea to kind of go in and look at some of the big names just to see, what really has changed. Are we seeing lots of things breaking down, turning over, and we're seeing things change on our charts, I think. But you still have, Procter and Gamble hanging out, kind of consolidating, holding its trend. You still, have Coke kind of in a little pullback opportunity. Can't say I hate it from a pullback opportunity perspective. Certainly not a confirmation candle. Pepsi, consolidation after its earnings pop. So still, to me, this area, much like the financials, is holding up a little bit better as we kind of work through some of them. Yeah, some are going to look better than others. Got poor WBA here knocking on the door of a breakdown. But they're always apparently knocking on the door of a breakdown. But many of the components within this space look more neutral to still slightly bullish in my mind. So still an area that doesn't scare me if I'm looking at things from a bullish point of view. Industrials, very sensitive, as a whole to the Chinese trade talks, as we know, breaking down, sitting on that 50-day moving average. This is the important price in my mind. So I need another day sitting right on top of that average. If we continue to move down, I'm going to have to take a step back from the industrial sector. If we see some upward movement off of this 50-day moving average in the next couple of days, back above that 77 mark or approximately that 77 mark, could be interested, but very cautious within the industrial sector as I'm going into the later parts of this week. If we give out on support and if we keep selling, there's going to be individual components in many, if not all of these sectors that are going to have some interesting bearish setups. And that's how I'm looking at the market right now, as opposed to, thinking, protective puts and things like that. I'm looking more to you add the bearish delta through bearish trade setups. Doesn't make me right or wrong. Time will tell there, and that can change very quickly if we see too many more sell signals over on the indexes. But right now, that is kind of the approach that I am taking. Still shying away here until I kind of see a little bit of clarity off of this 50 moving average. Let's go take a sneak peek over here. Of course, Boeing, probably the big one, big breakdown here today, closing below support, below the 200-day moving average. Hard not to call that a bearish signal in my mind. I just build my list off of, I just go to the Sector Spiders homepage, Ilka. So I go directly to the provider of those Sector Spider ETFs. They'll have the holdings for each of those ETFs. These are weighted by market cap, right? And so you can look at all of the holdings. You can look at the top holdings. What I typically will do is put around the top 10 or so holdings of each of the ETFs into my watch list. So I can easily transition from here's the ETF to here's what the individual components are looking like. So if you're looking specifically at the components, you'll probably need to build them into your own software, Ilka, but it's really easy to do. I just go directly to the sector spdr.com, the ETF provider, of course, for those Sector Spider ETFs. Very easy to find the holdings in there for any or all of them and see who the top or bottom or all of the holdings are. And I think it is a helpful thing to do. I like to just be able to kind of quickly do it. So most of these companies I've looked at for a long time, but I still forget their ticker symbols because there are lots of them. So 3M continuing off of its terrible earnings gap. Boeing breaking down. Not everything's going to be there. UNP kind of dojing here after a gap to the upside. Hard to see a great trade there tomorrow, but fighting its own. Honeywell I have it still as a bullish breakout candidate. Gonna have to move my lines there. So it's not everything is rough, but things are looking a little scarier than maybe I would like them to in this space. Just a little more weakness, and this area is a little more sensitive. Certainly, things like CAT very sensitive to the trade war talk. So cautious at this 50-day moving average before we go anywhere. I need at least one more day. Break below that, that's going to be a little concerning. Holds and dances could be an area for some potential pullbacks. Over in tech, another area that if I'm going to be doing pullbacks, it's tech, it's financials, and it is probably discretionary and staples. Those are probably the areas I'm looking to. Still not a pretty, not beautiful pullback, but still looking more like a bullish retracement than anything else. And over specifically on our tech ETF, we are working, and today at least, we held that old resistance, our old resistance as our new support. So if I'm going to be looking at a pullback, it's probably in financials or tech or staples, with just the way that those charts are looking. Things aren't looking too terribly rough over here. Microsoft, a little bit of a pullback opportunity. So yes, sir, you betcha. Okay, no problem at all, my friend. So nice pullback into the 20. Again, volatile style pullback, right? Not a nice orderly, slowly working down, having the momentum decrease on the way there. That's why I say I don't think it's tomorrow for pretty much of anything, but still looks more like a pullback than anything else in my mind. Same with Apple. Went an exercise with one of our team tackle members today. You can kind of see we used Apple, lots of little lines on it. So, but sitting on its 20-day moving average, still making higher highs and higher lows. Visa still kind of looking to hold its own here off of this recent run. Intel, well, we all know where that one is. I'm probably not going to try to buy, off of this old 50 level in this type of a market. Cisco, a little deeper pullback, but we've got earnings coming up in just over a week now on Cisco, so hard to swing trade that one as well. So things still look more pullbacky to me over in the technology sector than they look red flaggy, if flaggy is a word. So I still am okay with this. Really like to see it try to hold this breakout point. That would certainly be the best case scenario for bullish trades leading into the rest of the week. We'll keep an eye on how we interact with this 9 and this 20. As long as this 9's above this 20, it's really hard to be bearish. But if we start to see it turn over, that's showing some indecision, at least some slowing in the momentum side of things. Not there yet, but we are seeing it in several places throughout the market. Over in staples, I feel like we looked at staples, and I just missed we just missed technology before somehow. So same situation with staples. Cautious, looking at it as a pullback. Utilities, they don't care what's going on in the world around them. They'll just hang out in this trading range forever, apparently. It's volatile market, well-behaved market, pullback phase, upward movement phase. Nothing seems right now to phase the utility sector. Most of the stocks in this sector look very similar to this, last month and a half within this space. Maybe if we do see more selling, this is a defensive area that maybe that's going to be where we see some money moving into. It didn't happen today, though. It did not happen here today. 57, 59 continued to be the numbers. As long as we're in this range, I think the right way to look at it, a little bit skewed bullish with a neutral outlook. Nothing changing there. Today's candle really made a weird mess of the healthcare ETF. Now, if this was Friday's candle, I want to come to the weekly chart here. If this is Friday's candle, we've got a lot of time in a volatile market. We could see lots of movement between now and Friday. But if this is Friday's candle, we see downward movement next week. I could see that as a sell signal. We pushed through all of that stuff last week. That, in my mind, was a bullish signal. Definitely think right now with healthcare, at least across the board, you have to say, I need the rest of the week. I don't really think I'm going to be doing much on either side of the coin with healthcare. It is in a really weird spot in my mind with all of the resistance and the moving averages, stuff that we broke yesterday, still got a little overhead, saw a ton of volume on yesterday's candle here on this ETF as well. I think you have to be really careful, whatever side of the coin that you're on over in healthcare right now, honestly speaking, unless it's a very clean breakdown like we saw on MYL, just as an example. MYL, of course, broke down on earnings, but this was a clean break no matter what the sector's doing, what the market's doing, right? Obviously, it's pretty extended to the downside here today, but a nice clean break of support, I'm always going to be open to that, or a nice clean break of resistance that's really built up over time. I'm always going to be open to a trade like that, but that's the type of stuff I'm going to need to see in healthcare. It is in a very weird spot in my mind. I still don't think it's got great bearish signals. If by the end of the week, I may change my opinion and it may just free fall without me. But I think it is in a very interesting yet very difficult to trade spot with where everything has fallen over the last couple of days. Friday with that close, yesterday with that volume, and then today kind of sitting right in between those, daily moving averages. Tough one to crack in my mind. Still holding up at approximately the breakout point over in the discretionary sector. So again, those are the areas I'm going to be looking for, the things that still look like upward trends. Not going to be trying to, I don't really want to dislike the material sector, but I'm going to stay away if I'm looking at it from a bullish point of view. There is no doubt about it when I have other areas that are holding up a little bit better from a trend perspective, still right hanging around that old breakout point. Would like to see this hold. So the next day or two could be important for the bulls because these areas that are appealing to me, I know I'm just me, I'm just one person and not everybody agrees with the things I do and say all the time, but I can easily look and see we're holding the breakout point, right about there on financials, on technology, on discretionary. And it can be tempting to me from a bullish point of view. Those levels start to give out, start to line up. Well, goodbye, industrials. You broke that 77 mark, and I think you have to take a little bit of a bullish bias off of it because of that, whether you want to or not. If we can't hold these, all of a sudden, prospective buyers, I can't be the only one, or all of a sudden say, yeah, that looks kind of ugly too. Who wants to buy that? So the next couple of days could be really interesting as far as pushing us forward. Now, I really think we're probably waiting till Friday to kind of get some clarity or lack of clarity before we go, crazy one way or the other. It seems like the market that's just what the market wants to do. Real estate, finally giving up that breakout point here today. A lot of selling, just like the market. Did kind of catch our footing. I'm going to steal this line and because we don't need that trend anymore. And did kind of catch that previous intraday low and come off of that. So not a whole lot to see here. I still think overall we are neutral within the real estate sector as well. If I'm looking bullish, I want to get back on the right side of that breakout point, if nothing else. Big level of support, of course, at that 34.75 or thereabouts, that old breakout point. We did close below the 50, but this looks a lot more neutral to me than bullish or bearish today personally. And lastly, over communication services, another one of those areas that could, tempt some pullback buyers. Probably not me, certainly not tomorrow, but still holding up that trend. We'll zip this out a little bit. We do have some history at this 49 mark, as you guys know. Not a lot of history on this ETF. Always in my mind, the best way to view this ETF is to go in and look at its individual components, and particularly Facebook and Google. But Facebook, still a potential breakout candidate in my mind. Don't really expect it to get to the breakout point this week, but I still believe it is a breakout candidate. We looked at Google yesterday, a little bit of sideways back and forth, still holding that support, although that support break, there's not a lot of support for a little while. That one could be interesting. Your Verizons and your AT&Ts just kind of look bearish, blah, not really great bearish, but a little more bearish than bullish. AT&T doesn't look tremendously different than the Verizon does there. But then you have some certain things out there that are still kind of holding up on their own, and maybe still kind of choppy sideways, but even holding a little bit of an intraday breakout point, still closing above that 20-day simple moving average on Comcast, holding up nicely over on Charter. Disney has earnings, so whatever its chart looks like, we'll see it. And I think they were either tomorrow after the close or Thursday before the open. So who knows what that one's going to do. Netflix lives in a world where it just can never finally break out, but still a breakout candidate in my mind. Just again, I don't know that I should expect it to get there, but a nice clear level of resistance. I believe these guys were on the options report this week. Unchanged in my mind. Still looking at the same breakout as a potential entry point, just not very close, not nearly as close today as we were on Friday. And then EA has their earnings here tonight, I believe. And usually I say yuck to EA anyway. So as you can kind of see, we're getting into a much more mixed market. I'm not going to fault anybody for wanting to pick up some insurance, or if you've already picked up insurance, not going to fault anybody for that. Seeing things we haven't seen pretty much all year long. We definitely are seeing a spike in volatility. We are seeing some signs of weakness, at least, whether they're enough to scare you individually or not. breaking below the 50 on the Dow is not bullish, right? It's hard to make a bullish case for that. Starting to see a little more weakness. I'm not quite there yet. I would like to see, how we hold up at the 50 on the S&P 500 before I take, maybe a step into that direction. And like I said, in a market like this, I tend to look to, out of the money credit spreads, kind of going with the trend of things, because I'm not afraid to be a giant coward, as you guys know. So that's where we find ourselves after a day of selling, and I think the big thing is volatility is here. Today was just another day of confirmation. We can see it work back out of the market, but as of today, it is here, and we should treat it accordingly. Things are very mixed. Certain things are breaking support. A lot of these charts are looking a lot less tradable in the short term. Some of those pullbacks are going to be a little more choppy than maybe we would like them to be. So I think we do need to take a cautious approach personally throughout the rest of the week. I can't really get on board with taking an aggressive let's buy the dip here, but I can't really get on board with let's go load up on bearish positions. Yeah, let's go make some bearish trades. Sure, I'm always open to that. I know there's some things in the stock and options report that hit entry points here today or knocking on the door. Some of them hit their entry points, of course, yesterday. So I'll be very open to trading, directionally, from the bearish side of things. But for the most part, I expect it to be a credit spread week and a half. So that is kind of what I expect the next 5 or so trading days to look like for me. Over on the VIX, carrying on that big spike again. Whenever we see a big day like this, we're going to see a spike in the VIX. That shouldn't surprise any of us. I think the big takeaway is that, we talked a little bit about yesterday. We've seen it creep up even before today, even before yesterday, right? Volatility has been spiking here in May. I kind of think end of May, we're going to kind of look back and think that we kind of were rocky sideways. That's kind of what my expectations are as of right this very minute, that, we're not going to really have a runner, but not really have a tremendous runner to the downside either, but give up too much more support, I might have to change that stance. And regardless, big spike in the VIX. So much like yesterday, I think we need to expect increased volatility with all of our trades, whether we like it, don't like it, whether it comes to fruition or we see volatility start dipping right out of the gates tomorrow. I think we do need to be more prepared for volatility until that literally actually happens. Is always the approach that I think we should take. But do keep in mind, we've complained a lot about not getting great credits throughout especially the month of April, right? Spent the whole month above the 9 EMA on the NASDAQ. That'll happen. We're getting some now, so we're starting to get some decent credits available to us. So don't forget to take a look at those option changes. You're kind of debating your strategies. Credit spread won't always win, but when options are a little higher priced, it does make it more appealing, right? So over in the dollar, not a lot to see here, just continuing to do this little sideways dance. I still am looking for that confirmation for the longer term move, which right now is pretty much above that weekly. We talked about it yesterday, but in case you weren't with us yesterday, looking for confirmation above the top of the body candle from 2 weeks ago and last week's high as confirmation of this breakout. Until that happens, I'm probably just going to be boring, but I'm still looking at it this way. Certainly expect to say this over and over as long as we're above the 50-day moving average personally. So not really interested in this pullback, but am interested in potentially break confirmation above those weekly candlesticks to get me, potentially thinking position, a little or more position style trade over in the dollar. I do still believe that was a good break, and until it's done enough to, tell me that it's cleanly failed, I will probably say the same thing. Not a great day in the metals market. You would think with as much selling as we saw today, would have saw a little more movement in the metals. Did see some upward movement, but nothing tremendous here on gold. Did close above that 20, and so now it's again it's one of those things. Now we've recaptured that 9 EMA, and it's now working to the upside, acting as a little bit of potentially at least a support catalyst. So if I'm looking at gold from a bearish perspective, want to see that give out before I look to go bearish. Still not really interested in doing that. Could be, but not, at least not today. We do have resistance. I think our first level is at that 1290. If I'm bullish or bearish, I'm just leave it alone right now, but at 1290 would be where I had the support level if I were looking at a potential break or potentially where should it struggle. I think 1290 as our resistance zone is that first level, lining up with that trend line and that's going to be pretty close to the 50-day moving average, kind of the big one for me right now. So still a little neutral. I think we've got our support level down on these lows here about 1260 at 1266 or 67, and our resistance up here. Little bit of bullish signal here today, and if the market does really dramatically sell off, you would think that gold would be one of the areas that prospered in that environment, or at least was able to do okay. Certainly not a huge day today, but a little more buying than we're used to, recapturing the 9 EMA, actually closing above that 20 SMA here today as well. Still a tough area to trade in my mind. Then you have silver that basically does exactly what silver does. It goes back and forth, and it always finds its way right below $15. So just another day of silver doing the same thing that it's done basically since it broke, since its first intraday break. As crazy as that is, that first intraday break below 15, it just wants to hang in that area. And as long as it wants to do this, I have no idea what you do with it. So I think you do nothing with it because it is certainly back and forth, but it just seems like one of those things that, it's always just right below $15, no matter how it got there. There is a lot above it. I could understand the bearish retracement argument. I don't think today is a candle that we could use as confirmation. I definitely want to recapture that 9 EMA before I looked at it from that point of view. But with the behavior, I can't see that being an area that entices me at all, especially with some more fear in the market. I think it continues to be a leave alone for the time being. But I do get it. I do get some people are looking at this as a retracement. Just way too much weird stuff after that break below $15. And so they're on their own. So if that's where you're at, I wish you the best. Certainly not there myself. Over in natural gas, a little bit of a bounce back here today, working right into that 9 EMA, acting as our resistance level. Still, to me, it looks like the retracement for any of those retracement traders is intact. I think at this point in time, looking at this swing high as our resistance at 262 is what our primary level of resistance is. Again, and I'm not really saying this is going to happen, I'm just more thinking out loud. Sometimes you probably notice I do that sometimes when we're just doing this. If we are able to capture our footing here and then take out this resistance and this 50-day moving average, I'm still going to be, I still am not sold that this is broken down. You guys know that at that 250 approximately long-term support level. Bearish traders still were able to create a lower low here today, and I think they put in actually lower low and a lower high, not by much. So they're still in control. They still have the high ground in the form of this swing level of resistance. If we take that out, I think they have to start thinking, well, was this retracement or was this bouncing off of support? I'm not so sure either way right now. I still believe the breakdown is confirmed on the break between these lows here. But we do have a pretty decent little swing level of resistance right here where we know if we are trading into this bearish retracement, this should be the price point that holds us down. And over in crude, one day, and this was a good day in crude. Nothing happened. We talked about that 60 yesterday. We talked about that weekly chart several times. Still looks like a pullback. I mean, if you look at this weekly chart, it's kind of hard to see that that's actually a doji. This looks like a bull pullback, and that's all it looks like. Now, there's still a lot of time left this week, right? And it is certainly moving and shaking. We didn't go anywhere, but we did move back and forth quite a bit, closing down well off of the high from yesterday. But that's exactly what I wanted. I want to see it kind of pinch down a little bit throughout the rest of this week, and then some upward movement next week. I'm looking at this as a pullback opportunity. Obviously, we haven't got that confirmation yet. And once we give out that 60, I will certainly change that viewpoint. But I really would like to see it spend the rest of the week within this range between that, these moving averages, between the 9 on the top and the 200/50 day moving average on the bottom, close with that doji type of candle on that weekly chart and show us some upward movement next week. Will I get that? I don't know. I'm not going to pretend to know, but that is what I'm looking for. That is what I want to happen. And that is the trade that I'm kind of mentally preparing for. Below 60, think you can start making much stronger bearish arguments. Above 60, I just can't. I mean, I don't think you should do anything that's not intraday with crude until we get some confirmation. Don't get me wrong. But I think right now with where we are from a price, we do have reason to believe 60 is a pretty decent level of support. On that longer term, it doesn't look like a bad pullback whatsoever. We've got overhead. It's not ready to go in my mind tomorrow. I need a little bit more pinchy behavior. Stay within this range for a few more days. Give me some upward movement next week. It's going to look like a good retracement if that's what we get. We'll see if that's how it goes. So, and nice to see. I saw you had did your Debicon on DIS earnings. So that'll be an interesting one. They're tomorrow night. Is that right, Ilka? I believe they're tomorrow night. I know they're either tomorrow or Thursday before the open. So that'll be a fun one for you. Yeah, not a ton of earnings. We'll only have around a dozen S&P 500 companies with earnings here tonight or tomorrow. EA, TripAdvisor, kind of the big names, not any huge names reporting here tonight or tomorrow morning on the earnings side. We just kind of skipped over that one. A boring earnings plus a pretty interesting day in the market, right? Nobody wanted to talk about, TripAdvisor's earnings to get this going today. So I think, again, big takeaway, volatility is back. And all that means is what it means, right? Expect more day-to-day movement, more, I don't know, irrationality. I don't know if that's the right word to use or not, but expect it to be a little more of a wild ride than we have really had to deal with over the last little while. Maybe it'll kind of fizzle out, as the week progresses. Maybe this is the new normal for the time being. But that's really the thing to be keeping in mind in my mind. I don't think there's enough strong signals to think that this is bearish, but I do think we are seeing more sell signals than we've seen in quite some time. I don't fault anybody for looking at protection, or whether protective puts or pulling off bullish trades or adding bearish delta in another manner. Certainly wouldn't fault anybody for taking that approach right now. For me, it's really going to come down to the biggest one's going to be that 50 SMA. On the S&P 500. That's going to be probably the big one. That's our breakout point, right? We saw us fail there on the Dow. That was a recent breakout point. If that gives out, all of a sudden, now I've got a falling 9, below probably a falling 20, much like the Dow Jones. Now I'm below that 50 SMA. So that's probably the biggest one in my mind. So I'm not turned on the market yet. Overall, I still think this is, a little bit of an overreaction to news that, for the most part, Trump tweets, we all know how that goes, right? His Twitter can get us all, it can help us all too, right? Certainly didn't complain about any of our bearish positions on the open on Monday, but, it's, this is also stuff we've known for a long time, right? The trade stuff. So maybe the market needed a reminder that, it's, thinking it's going to get done and it being done are not the same thing. So whatever it is, definitely more selling than we're accustomed to. Definitely breaking more little levels of support than we've seen in quite some time. Not a ton of things breaking a long-term support, but we've already started to see it kind of creep in, over in the Dow Jones here today. So just continue to follow your rules, keep yourself in the positions that you're comfortable with. Don't feel like you need to chase anything. You guys know the drill. That's always the way. That's always the answer, right? Just sometimes we have to remind ourselves more on days like this. So, some days, it's easier to just go with the flow and not question your rules and your system design. Days like this, you're thinking, oh, wow, that's a lot of selling. And it is. I mean, we certainly saw more selling than we are accustomed to as of late. So, but remember, that selling creates opportunities too. The first part, usually, guys probably hit a stop loss or two. I don't know about you guys, but probably did. So today, so that first little while where it's back and forth does kind of get a little difficult, but clarity will develop and we will get opportunities. So with volatility does come opportunities. We're just going to have to let it kind of play out a little bit before we get some good confirmation, I think. So, ladies and gentlemen, that will do for the market recap today. It went a little longer than normal, but I figure on a day like today that's when you're supposed to do that. And plus, I didn't have anyone to talk stocks with all afternoon. I needed you guys to talk through this stuff with me. So as always, thank you so much for joining me. It's always my pleasure. Hope you find it helpful. Always enjoy doing it with you guys. I know it's a lot more fun to do this process with you guys than on my own. So thank you for joining me. If you are new around here, of course, be sure to subscribe to the channel, hit that notification bell. Join us over on Twitter, of course. You can always find me at Frank Martin23, obviously at Tackle Trading for our Twitter as well. I don't know if you guys had a chance to get over to the Instagram page for the stock of the week that we got going here, as well as the vote for the Analyze the Stock. That vote's still going. It'll be going until, I think, midnight tonight. So you still have time to hop over to the Tackle Instagram, do your vote to see who you want to get a little bit deeper look at. So if you got a minute, pop over there, take that, take the quiz, pick your stock. And Tim did a really interesting job going over X for his first stock of the week. So would definitely encourage you to check that out as well. So ladies and gentlemen, that is going to do us here today. But as always, thank you so much for your time. We've got the Coaches Show this afternoon for our pro members, so enjoy that. It should be a lot of fun here tonight. If you're not a pro member, we certainly invite you to head on over to Tackle Trading. We can get you hooked up with a 15-day free trial and welcome you to our community. So certainly would be happy to bring you in. Always good to have more traders, and you're very welcome, Mike. Thank you all so much, guys. Follow the rules. Don't let it rattle you. I know days like this are easier to get rattled on than days that we were used to in April, right? And that's true because we're people. But try not to let it, get you to abandon your rules, abandon your position sizing, doing stuff just cause, right? That we don't want to do that. We don't want to be, reactionary. We want to be following our rules all of the time. Sometimes it's easier than others, right? We're people, and I understand that. I have to pinch myself all the time. So you're very welcome, Patricia. Very welcome, Lewis, and you as well, Tanner. Thank you so much. I'm going to go. And I think it's lunchtime now, and then I'll go in and look and see what exactly it all looks like today. So thank you, Ilka. Thanks, guys. As always, it's my pleasure. Thank you so much for joining me. You guys have a great Tuesday afternoon. We'll see where this market takes us tomorrow. It's probably not going to be boring, whatever it does. So we'll see where we find ourselves here tomorrow afternoon. So thank you so much, guys. You have a fantastic day, fantastic afternoon. Enjoy the Coaches Show, and I will see you tomorrow. Thanks, everybody.